guys. It's Austin, and this is the Austin Smith Real Estate Podcast, where we talk about real estate and we talk about lifestyle. Today on the show, this individual, I'm glad that I got a chance to bring him on. We're going to be discussing mortgages and buying here in 2018 and kind of what that process looks like. What's the difference between, a mortgage officer, loan officer, mortgage banker, mortgage rep? We're going to discuss the differences between that. We're going to discuss what you need in order to get pre-approved for a mortgage. And we're also going to give you some tips, some strategies, some hints on how you can be competitive in 2018's seller's market. Simply because everybody's going after the same things. We all want the renovated properties. And so does everybody else. So how can you make an offer that differentiates yourself from the competition? We're going to discuss that as well. So this individual, he's closed well over 300 transactions. He was voted top 40 under 40 by Mortgage Magazine of America. He's closed over $80 million in closed value. This guy does his thing. So I'm glad he's going to be able to share some of his insight on what he's seeing from the lens of a mortgage officer. And we're going to dump right into that. Before we get into the show, a little housekeeping. If you feel like this podcast has brought you some valuable content, if it's helped you in your business, personal, lifestyle, if it's helped you, get into iTunes, leave me a rating and review. I would greatly appreciate that. Let's keep sharing this message. And if you happen to know anybody that can benefit by coming onto this podcast, and if you feel like they have a lot of insight that they can share, please let me know. Let me know ASAP. Let's bring them on the show. And I said let's bring them, let's bring him, not him. So, gal, guy, woman, man, please let me know so we can get them on the show. Ladies and gentlemen, let's get into the show. Welcome to the Austin Smith Real Estate Podcast. And this is actually the very first interview. And it's cool because I'm not going to be going off of a script. None of my guests are going to be going off of a script. We're just going to be bringing you that raw content straight to your mobile devices, straight to your headphones, straight to your homes. And what's going to be cool about it is it's all about like the process, right? Like with anything in life. And today we're going to be discussing like the home buying process, but the process in general. And it'll be interesting to see how I start this very first episode on this podcast, which I'm pretty sure I'm going to be terrible at. And I'm interested to see where this podcast is going to be in the next 2 months, 3 months, 6 months, and a year. So we're going to jump right into it. The one thing, if you're on your phone, check out austinsmithrealestate.com. Be sure to register so you can get the content on the subscriber list. Get the content straight to your email. We're going to be bringing on some real heavy hitters as far as guests to this podcast, so that way they can kind of share their knowledge, share their expertise with you. And I'm pretty sure you're going to be willing to join this ride with me. So definitely go on to iTunes. Leave me a rating and review if you feel like this podcast was extremely valuable to you, and the content and the experiences that these guests provide are valuable for you. Sign up, leave me a rating and review. And obviously, if you know anybody that's looking to buy, sell, or invest, let me know. Keep me posted. Let's keep on working. So today's guest, he actually happens to be my mortgage officer or my go-to mortgage officer. And we're actually in a couple of deals that are going to be closing real soon. This individual was voted top 40, under 40. I mean, technically he's under 30 still. He was voted top 40, under 40 by Mortgage Magazine of America. He's closed well over 300 transactions to date, which equals close to around $80 million in closed
value. Ladies and gentlemen, I want you to introduce my mortgage officer, Chris Broward. Chris, what's going on, brother?
What's going on, Austin? How's everything going?
I'm doing well, man. I'm doing well. Listen, thank you for taking the time to be on the first episode.
Absolutely.
Especially when I'm getting out all the kinks and all the technical difficulties. I'm not a producer, but thank you for taking the time. We're going to jump right into this. Just kind of give us, who you are as a person, what led you up to kind of this point right now, because it obviously seems like you're having a lot of success.
Yeah, definitely. I appreciate it. Definitely psyched to be on the first episode. Go through the struggles with you. That's what we've been doing. So started off little less than 7 years ago in the business. What drove me to the business is I grew up in a family where my mom worked in real estate for a little while. My dad was a contractor. And so, the building of things and the seeing how things go from the beginning to the end was something that I cherished and I really liked. And going to college, I had a mindset of, let's say, business. And I said, well, what can I do in the business field that would relate to real estate? So I got into the management side of it to see how managing people would be something that I could or could not do. The reason being is I wanted to have a real estate team to work with. So during that process, I had a former friend from high school's father reach out to me and say, hey, listen, what do you think about the mortgage business? Maybe you should get into this side of it. So I was a kid graduating from college, and I said, let's take a shot at it. I took a shot, and that was, like I said, it's a little right around 7 years ago, and I jumped right in. It was a pretty difficult transition from being a free-spirited college kid who, had the ability to go to college, have a great time, learn a lot, to then coming into the mortgage business right after the largest or one of the largest housing depressions that we've ever been in. And I struggled. The first year was hard. The second year was harder because you're expected to grow. And when growth is halted by certain things, you run into a couple problems. And from that second year, I learned a lot. And I completely transferred my entire mindset to, I'm not going to be the person who puts 2 years in and then doesn't continue with it because they weren't successful. I'm going to be the person that becomes the successful version of what I wasn't doing right. And the rest is really history. I've doubled or tripled my business every year since. And, with the help of people that refer me clients and that give me the opportunity to help them make more money, such as yourself, it has been a great experience for me.
And that's interesting they say that, because it's just like I said, like it's about the process, and you kind of had that mentality where, second year in business, which we both hear, we both had experiences. I remember calling you that one time, and it's just like, dude, this is just so frustrating. You know what I mean? So it's cool to see you persevere through those 2 years, and not to mention, like, this is something that right after college, so is it, you've had no corporate work experience after college, have you?
Nope.
Okay.
This is it. This is, I saw from a young age, entrepreneurship was something that I really wanted to get into. And I said to myself, hey, look, my dad did it. My mom was doing it. She was self-employed too. She was working in real estate. And I figured I might as well join the family train,
I got you. So, and you think that transition was a lot easier because you have, that surrounding that you grew up in, or that environment that you grew up in?
I think it's not necessarily easier. I don't know if it's that word. I think it's more familiar. I still think it's difficult. I don't want to say, if you watch someone go through it or you see them go through it, that it makes it easier when you go through the same trials and tribulations that they do. I think personally, just being familiar with that happening and having the ability to say, hey, I witnessed this before. It's not easy. You probably had some of the lowest points in your life, but hey, I know how to get around this. It's going to be difficult. It's going to be hard, but I know the steps to take. So I'm going to do it.
That's interesting because now, and it's cool because a mortgage officer, real estate agent, entrepreneur, running your own business. And it's interesting because, I'll read plenty of books that are just, business books that, have completely obviously nothing to do with anything about real estate. But it's interesting to see how, kind of that mentality gets spread across either running your own business or entrepreneurship, like in general. So that's a pretty interesting point that you have put out there. And so you've taken this knowledge and this expertise, you develop into, a pretty strong mortgage officer. Kind of give us kind of what your primary responsibilities are, because some individuals they'll wonder, okay, do I just go to a bank, for my loan? Do I go to, a mortgage company? What's the difference? Who can provide me the best? What's a mortgage broker versus a mortgage officer? Kind of give us your primary responsibilities and duties.
Yeah, absolutely. So in the mortgage world, there's three people. There's the mortgage broker, there's a banker who would be a Wells Fargo, Bank of America, Chase type of person, and then there's a mortgage banker. The mortgage banker is a combination of the two previous ones. What a broker is, a mortgage broker is somebody that gets a call, gets a deal from someone, they package it as best as they can, and then they send it off to another company. And they have no control over that loan. They have contact with people. They call the company that they give it to every once in a while to get an update. And then at that time, if there's a closing, they will get paid by the fees that are charged to the borrower. You then have your banker, Wells Fargo, Bank of America, like I previously said, that then they decide everything that goes on, because you walk into the branch, you get all the documentation, and they do it right in front of them, and they're lending the money that they have. Then you have what I am, which is referred to as a mortgage banker, who we have the ability to take all your documents in, give you a pre-approval, make sure that you're pre-approved by running credit, going through the different desktop underwriter, loan prospector approvals from our computer. Then we have the ability to shop that loan to 20, 25 to 30 different places. Maybe it's a bank, maybe it's a different mortgage banker, and pick the best one that fits for that person, gets them the best rate possible, and then the lowest fees. What is even better about it is we're lending you our own money. We have warehouse lines that are set up to where we can send out a $250,000 wire at the closing table to cover a mortgage on a property. And then after it closes, we are within, a 30 to 60 day time frame packaging it to sell it to somebody. And when we sell it, it doesn't change. The parameters don't change. The loan term, the rates, the fees, nothing changes. Our borrower gets exactly what we gave them. And the biggest benefit about a mortgage banker as opposed to a broker and then just a regular bank that you would go to is the fees that are charged are a lot less. My paycheck isn't it doesn't survive on how much I charge the borrower. It doesn't work that way. We get paid when we sell our loans. If we have great loans and our loans are bought by people, that's how we get paid. I don't have to tell my client I'm going to charge you 3 points on the deal, 3 percentage points on the deal just so I can make my salary. It doesn't work that way. So the borrower is more inclined to use a mortgage banker for the multitude of reasons of it's easier to work with them. They're from beginning to end, you work with us from the time you do a pre-approval to the time you close, and it ends up being, a little cheaper in your pocket at the end of the day.
Okay, got you. So, and just to make sure that, we're all understanding, the mortgage officer / mortgage banker, you're using those terms interchangeably.
Say that again?
The mortgage officer and the mortgage banker.
Yes.
You're using interchangeably.
Right. So you can be a loan officer at a bank, or you could be a loan officer at a mortgage bank like I am. So like if you ever saw my business card, it says mortgage banker on it, just to give people the clarification of what I actually do.
Gotcha. Okay. So for somebody who's getting ready to go out into this market, for someone who, whether they bought a home previously, obviously it's been a couple of years and they're not familiar with the pre-approval process or, what to do to obtain a loan or a mortgage, what's the very, very, very first thing that individuals that are preparing to buy in the near future, what's the very first thing that they should do?
They would contact someone like myself and they would get what's called a pre-approval. And a pre-approval is a financial look at income, assets, credit, and the newest, what has come out of the recent housing crisis in 2006, 2007 range is what's called the ability to repay. So if you come to me, let's say today, I'm going to send you a short form application to fill out and ask you for a couple documents to verify those things. We put it into our systems. We run your credit. I will take a look at your credit, see where your credit scores fall, whether they fall in line with, this loan or this loan, whichever way we can, put it together to make it best for you. And then through that process, like I said, we run it through those automated underwriting systems, Desktop Underwriter and LP being those two, make sure that we get an approval from them. We make sure that you have what's called the ATR, the ability to repay, and then we issue the pre-approval to the real estate agent, or if it's not a real estate agent, if it's a for sale by owner and there aren't agents involved, we issue it to the people that need to be making the decision on the other side.
Gotcha. And as far as, I know you mentioned that based off of their financial profile, you're going to be looking for ways to give them the best loan package based off of their situation. Now, obviously, there's FHA, there's conventional, there's VA, there's the USDA loans, there's NACA, there's so many loans and possibilities that are out there. But obviously the more, and at least, when we talk about what it's like buying in 2018, because obviously it's a bloodbath out here, the common ones are FHA and obviously conventional, which individuals usually tend to go after. And I would say out of 10 of my clients, 9 of them will go after FHA or conventional, and maybe one would go after, say, a NACA loan or some type of government assistance program, or even a VA, where you don't have to worry about putting a down payment. But can you give like the subtle differences, because then I'm going to tie that into getting competitive when buying in 2018. Can you give us like the distinct differences of FHA and conventional? What do each loan kind of entail, and then how would someone qualify for each loan? Just FHA and conventional.
Yeah. So with FHA, it is a government loan. It's government backed. So you're going to pay a standard mortgage insurance premium monthly, regardless of your credit score. You're going to pay 0.85% of the loan amount divided by 12 monthly. And that is going to be regardless if you have an 800 credit score or a 560 credit score. That's what you're going to pay. FHA also allows.
And that's the PMI, the private mortgage insurance.
PMI is what would be on a conventional loan. What FHA refers to is just mortgage insurance premium. Now, when you have an FHA borrower, it's two benefits or two things that roll with it are the down payment of 3.5%, and then the less stringent guideline when it comes to debt to income ratios. It's not that you can't go a little bit high on a ratio with a conventional loan. FHA just allows it a little bit more, pushes it a little bit further. And then with the conventional loan, you have the minimum down payment of 3% for first-time home buyers and the minimum down payment of 5% for people that are just in general looking to buy.
And do those, because obviously with FHA, the individual has to be owner-occupant. For a conventional 3% first-time home buyer, do they have to be an occupant? Because I can already tell And
Yes.
even when I'm listening to it, you already know what I'm thinking. Can I use that to buy my another, you know what I'm saying? Can I use that to buy another multifamily? Because I'm pretty sure everybody wants to know, you know, what's the easiest way for me either to purchase my next investment property or, you know, what's the lowest that I have to put down? So
Right.
they have to
Right.
be owner occupant 3%. If,
Yes. Yeah.
Gotcha.
So when you do a conventional loan, the 3% loan that is associated with that, you have to be an owner occupant. Now, with the expansion of conventional Fannie Mae and Freddie Mac, the two governing bodies over the conventional mortgage market, they've kind of expanded some things. And one of the things that they've done is they've come up with for Fannie Mae Home Ready and Freddie Mac Home Possible loans that allow you to buy multifamily properties with minimum down payments. In the past, you know, I was saying like a year and a half to 2 years ago, you would have to put at least 20% down on a multifamily conventional. Where FHA, you could put 3.5% down. So conventional got more competitive in that market. And if you don't own another home at all, you have no other ownership in the property, the Home Ready and Home Possible loans allow you to put as little as 5% down on a multifamily. So in the realm of investing, if you're going to be buying a house and your first house you want to keep as an investment for when you do later on move on to, you know, what people refer to as their dream home or to their family house, you can buy 2, 3, 4 family with as little as 5% down on your first house.
Gotcha. Okay. And taking, you know, whether the individual go FHA or conventional, and real quick, because I know this is another question that a lot of people ask me, talk to me about just the income requirements, like, you know, minimum credit score for FHA versus conventional, and just unpack the debt to income ratio a little bit more
Okay.
before we move into buying.
Yeah. So FHA's minimum credit score, it really varies where you go. The minimum credit score that most companies go off of is 560. If your credit score is from 560 to 579, though, on an FHA loan, you're required to put 10% down. And then 580 and above, you have the regular requirement of just 3.5% down. On a conventional loan credit score, they do really put the lowest at 640, but you can be approved if you have between a 620 and 640. They just are going to really penalize you on your interest rate. The interest rate is going to be hit severely if you do have below a 640 on a conventional loan. And then in terms of the debt to income ratio that we were talking about, what that refers to is they will take what your proposed monthly mortgage payment will be on the new house. What that consists of is your principal and interest on the mortgage, your taxes monthly on the property, your homeowner's insurance, and then if you don't put the 20% down and you have to pay the PMI or mortgage insurance premium, whatever those are, and then if you do buy a condo townhouse, the HOA fee, they take that total number and they add it to your outstanding monthly debt obligations from your credit report. A lot of people sometimes think, well, you know, I pay insurance for my car, or I pay the dog walker, or I pay Netflix, or I pay, my cell phone bill, or my health insurance is not paid through my company, I pay it by myself. That is not stuff that we take into consideration. What we take into consideration is your student loan payments, your car payments, your credit card payments, any other installment payments that you have. So if you took a personal loan out to finance something and it was a $5,000 loan, whatever that payment is. So we take it directly off of your credit report that we pull in the beginning of the file.
Gotcha. Okay, awesome. So now that the individuals got their pre-approval, they've, you know, done whatever shopping, And now, they're starting to get ready to look at homes, which obviously, my job comes into play at that point. But because individuals, especially millennials, we want everything, brand new, shiny, renovated, stainless steel clear, fridge, stainless steel appliances, throw me a in-ground pool in the basement. Like we love all of that stuff. And of course, we have champagne taste beer budget sometimes. Listen, I understand. I'm with that on most of the other things that I choose to purchase in life. But how can someone, and I'm going specifically on 2018 where the competition is tough, properties that individuals like and are going after, they're getting bidded up, 5, 10, 15, 20% past the asking price. And I almost feel like if people are not able to, compete with so much money, that it becomes harder and harder. But at the same time, obviously, I participated in transactions where, we weren't coming down with a 20% conventional loan with $50,000 down. And yes, the FHA 3.5% down on the lower down payment, option loans have worked. But what can the buyer do to put themselves in the best situation, whether that's financially or, pre-approval wise? What's the best thing that they can do so that they can compete in today's market?
Well, I think it involves an array of different things. It is very difficult to pinpoint it and say, hey, if you do this, it's going to be automatic that you get the house, because we live in a market, like you said, where, I've had clients that have put an offer in on a house on a Monday, and by Wednesday, there's 20 other offers. And when you run into that, you have to stand out. You have to differentiate yourself. One of the things that has benefited someone like myself is, as a mortgage banker, we have to put ourselves at a premium to the real estate agents who refer us the business. And what we do is we do send a full pre-approval, meaning we've gone through everything. So when that listing agent gets that, they are in the business. They understand that we vetted that client. Now that client goes and puts the offer in, that agent's going to say to the seller, hey, this is really good. This is a valid pre-approval. All this really means is we're good to go with just a valid appraisal, and we're good. The other aspect of it as well, from a mortgage person, is we have the ability to close loans in 2 to 3 weeks. The common misconception about loans is, well, it takes time to do this, it takes time to do that. There's really only 4 steps that happen. And if everybody's on the same page, you can do it very quickly. So you don't have to sit there and say, well, it's a 30-day closing process. Well, if you submit an offer and have that offer letter say, 2-week commitment and 3-week close, that's going to stand out from everybody else. That's going to make you stand out from the person next to you that has the same offer as you but needs a 60-day closing.
Okay, good.
And the other thing that I think, it's almost like gamesmanship, and I think this is more with the realtors that I've noticed and I've seen the agents do a lot of, is their ability to talk with the listing agent and give them, hey, we've done business together. I can promise you this, we're going to be working together with you on this, mortgage person I've been working with for a while. They get things done. They get it on time. And then the part that I think a lot of people don't do, and I think it's actually really a good idea, is write a letter. I'm not saying that, you go to a house and that house was redone by a contractor and, all they want is the highest and best because they want to get the most money out of it. But if you have a nice couple that's, got a nice child, maybe 1 to 2 years old, and they write a pretty heartfelt letter, a touching letter, and the seller of that home has lived in that home for their life, and now they want to pass it on to a family, a lot of people don't understand how meaningful that really can be. and how far it can go and you getting approved. And, case in point is last week, I had a client who put an offer, and her offer was $10,000 less than another offer, and her offer got accepted because her and her husband are expecting, and the person selling the house grew up in and then raised her family in that house, and she wanted that same feeling and that same pride of ownership to be passed down to this young couple. So sometimes that really does help.
And that's a very good point, because I actually remember we actually did that for some clients of mine that we were putting in a pretty strong offer, and we actually wrote that heartfelt letter. The seller absolutely loved it. We got great feedback on it. We didn't get the home, but it goes to show that yes, people do like those letters, and it does make your offer stand out. And I do try that strategy sometimes. So that is a very good point. And it's all about just doing something different. Even and just chopping into the emotion, because whether buying or selling, it's all emotion. It's all emotion, and especially when you're moving a lot of money around, you're moving a couple $100,000s around. And yes, it can get extremely emotional. And individuals that I have had clients, I've had sellers that have accepted offers on how they felt emotionally towards those specific, those particular buyers. And it helps out a lot. I mean, it's the same thing, as a job interview. I feel like in today's current market, it's do you go through monster.com and try to submit an offer just like everybody else? You know what I mean? Or are you going to be the one to, pop into the office one day with your resume and ask to see the HR? You know what I mean? What are you going to do different to kind of stand out? And that's a very good point. And so and you're kind of allowing me to transition perfectly into it, because you mentioned, okay, maybe that might not be the best case for, an investor who's just looking to offload their property. They know it's brand new. They know it's going to sell for top dollar. They're more interested in seeing if they can go over that asking price. So they don't really necessarily care. They might pay attention to, who's responsible on the mortgage side for that to make sure that the deal can get closed. But, the heartfelt stuff, that might not work in that scenario. So, you mentioned that might be able to work for individuals that are just looking to, maybe move, retire, downsize, perfect understanding. And then talk to me about foreclosures, only because a lot of people, when those two options aren't available, right? They strike out on the brand new renovated property at top dollar. They strike out on the properties that are being sold by individual homeowners, and they're getting struck out in that category. And then they start to get, that idea, why don't we just find the diamond in the rough? Why don't we just find the property that needs a lot of work? We can fix it up. We can do it exactly how we want it, and we're going to get the cheapest price. And I feel like a lot of people, especially when they talk to me about it, a lot of people are going after foreclosures because of the attractiveness of the price, and not because they really understand the work that is involved with managing, right, a project after, after it closes, because that becomes almost like a second job. Managing the contractor becomes a second job. And, so when people, start to ask me about foreclosures, I really kind of get into the nitty gritty of why they're looking for a foreclosure to get an understanding. If they purchased property in the past where they've done that before, okay, so be it, time for round two. But, right, first time home buyers that are looking at the foreclosures, it's okay, well, what's that sweet spot of, this is what you really want to do, or you're just being blinded by the, the lower price. So for individuals that are going after foreclosures, is there a certain loan that works better than others? Would an individual be able to go after a foreclosure with an FHA loan, or, can they only do conventional? Is it harder with an FHA loan? What's your opinion and experience on those?
Well, here's what I'll say. When it comes to a mortgage person and it comes to a real estate agent, foreclosure is not the negative four-letter word like they commonly say. It's not that bad. The worst is when they say short sale, because that's when you get into a point where the bank that's selling the house has to approve of the short sale, and that could take a very long time. When it comes to foreclosures, the condition of the property is not always that bad. There are times when it actually is in pretty solid shape. So you could do a FHA loan. You can do a conventional loan. You can do really any loan that you choose, just of the understanding that there's going to be some maybe repairs that have to be done. And if those repairs have to be done, they are going to be required to be done before the closing. I've seen foreclosures with minimal repairs of $1,000 worth of repairs, and that could be done before closing. Then I've seen repairs on houses that need $50,000, $60,000, $70,000, $100,000 worth of work. What that leads you into, and what the ability to buy a foreclosure is actually good for, and Austin, you could speak to this because you did this yourself, is what's called a renovation loan. They have two forms. There's the newer conventional version, which is called home style. It hasn't been around as long as the FHA version, which is called 203K. And that allows you to roll in the repair work that has to be done into your mortgage. So if you buy the house for $150,000, it needs $50,000 worth of work. On the mortgage side, you now have a $200,000 price. Your down payment comes off of that. And then once the closing happens and you close on the house, the contractor that you choose to do the work, that's licensed by the state of New Jersey, is bonded and insured, they can begin the work as soon as possible. So with foreclosures, a lot of time people get or start looking for them because of the great deals you can get, and you can get some awesome deals with it, without a doubt. With those type of loans, the renovation loans, buying a foreclosure can be as easy as buying a regular property.
I totally agree. Yeah, I've been in deals where foreclosure is exactly what you said. The one that we're closing on, next week is a foreclosure that is pretty much in pristine condition, and that was actually one of my smoother processes from start to finish.
Exactly.
Totally agree. And then I've had foreclosures where that was not the case, and it's taken a couple of months to complete. And I remember at one point, when I first started, I remember in the summertime I was calling you like, hey, listen, like we're in a situation, like I want to know if you can help me out. And we were trying to get this, deal done at the last minute, and we were dealing with this foreclosure. So I appreciate the clarification for individuals that maybe were thinking about it but didn't know how, or at least as long as they understand just what lies ahead of them, when going after that particular foreclosure, whether it's a foreclosure that's in pristine condition or whether it's a total wreck,
right.
Just so they understand exactly what they're getting themselves into. So with this information, with this knowledge, and obviously at that point, I don't want to say your job is done, but you've already given the alley, and now the agent, does the oop, and then from there you start working the transaction. And now at that point they've already found the home, and they are now handling the logistics of the process, the home inspection, appraisal, things like that.
Right.
So which kind of the agent is there guiding them more so during those processes, and then you're just handling the paperwork on the back end. The individuals that are looking to purchase in the very near future, they kind of have that next step. The last question I'll ask you before we get into the core four is, for someone that's maybe looking, and this you can get into your kind of financial advisor role of the mortgage banker. For someone that's looking for 6-8 months, a year from now, what are some things that they can do? What are some small baby steps that eventually, lead up to something massive? What are some small things that they can do to start getting their finances in order to be ready, to go after that pre-approval?
Well, this happens a lot, and you get people that rush into things and they get pre-approved and they want to buy something, and then they realize, you know what, I just can't do it right now. So my advice to them is fourfold. For starters, contact the mortgage person. have them take a look at where you currently stand with your credit and your finances, and let them guide you on whether or not they think you can do it at that moment. There's mortgage people that are out there to do one thing, and that's make money. Then there's mortgage people out there, and I like to say that I fit in this category, and that's give people the American dream of owning a home. The ability for someone to come to me, let me look at their credit, let me see what their financials are, and say, hey, listen, maybe right now is not the best time. Do this, this, and this to get your credit up, and put away $1,000 a month and save it so you feel more comfortable when you close. Because there are times when people will go to the closing table and they will have $5 left in their checking and savings account because they put all of their money towards the purchase. Sometimes that's not the best. The second thing I tell them is, think of something, if they're renting at that time, think of how easy it is to pay that rent. If it's really easy, say go $200 to $400 higher. So if they're renting for $1,000 a month, right, and they pay it easily, take $200 and $400 or $200 to $400 out of that account every month, put it into a new account, and don't spend it. To give you an idea of how an escalated and higher payment is actually going to feel. Because I'm going to be honest with you. I bought my house in November, and I went from no payment to a mortgage payment. And it's shell shocking. It's crazy is the best way to describe it. And you watch the money, literally watch the money go out of your account. Some people can't deal with the big jump like that. So I tell them, why don't you get used to it a little bit? It's just, use a sports analogy. Not everybody is LeBron James and go from senior year of high school to rookie of the year and an all-star in the NBA. Some people need college. Some people even need the minors. So you can't just necessarily think you're going to be LeBron James. You may have to be the guy who went to college for 4 years, was in the it's called the G League now. I don't even know why. The G League for 2 to 3 years.
I realized that, I happened to turn on the TV one day, and I realized that, and I was like, when the hell did they change it to the G League? But
I don't even know what it stands for.
I don't.
But whatever.
I don't even show my ignorance, and it's bad. I haven't.
Yeah, right.
As much as I play basketball, I
exactly. That's what I'm saying.
A lot of stuff recently.
So they may have to spend 4 years in college and spend 2 to 3 years in the G League to then make it to the NBA. Well, that may be you in buying a house. You may have to rent $1,000. And then it's not the time. So now you do the trick that I tell you, and you say, you know what, that's easier for us, but I don't know how high we can go. So then you know what, spend another 6 months to 12 months in that rental. So now you find a new rental for $1,400. And then within that year of time, maybe year and a half of time, you're at a point where an $1,800 or $2,000 payment a month that you'd be paying in a mortgage is now more comfortable for you. And I recommend that to everybody. The third thing that I tell people is you gotta be realistic. You talked about champagne taste with a beer budget. I'm talking about champagne taste with a water budget with some of these people. You can't expect to have the Taj Mahal and be pre-approved for $150,000 to $200,000 mortgage, but that doesn't mean your house can't be nice. I've seen some places that we've done loans on where the purchase price is $150,000 and their payment is very comfortable for them. The house is beautifully done. They don't have any stresses of not being able to make the payment, and they live happy. And then I've seen people that stretched it because they wanted a little bit more room, and now they're in a $225,000 house. They struggle with making the payment. They updated it, but now it's a little older, so it's a little run down. They can't continue to update it, and they live with that daily stress. So the be realistic portion is very important because you have to be able to make that payment. You can't live with that stress. That's not fair for you, for anybody that's going to be around you. And then the fourth thing that I recommend is they call Austin Smith of Keller Williams and Chris Brower to help them with the
Yeah,
process.
awesome plug. Awesome
No,
plug.
I'm just, I'm just kidding. The fourth thing, obviously, yes, please do call us. We definitely appreciate the business. But the fourth thing that I recommend is understand that this is a job that professionals do. The ability to be in the business for almost 7 years, other people being in the business for a long period of time, this is a business for professionals. The idea of customer service has gone away in a lot of industries in this country and in this world. And for me, it hurts to see that because, you talk about millennials, you talk about people at the touch of your fingertip. You can go to a website and find them giving out 1% interest loans on a mortgage, and you think that's great. Well, that's great. And then a year and a half later, when you still haven't closed, there's a problem. And when you call them, you get an answering service. And then when you get the answering service, they transfer you to another answering service. The fourth thing is very important because customer service is a invaluable piece of how real estate works. When you have an agent, such as Austin is, who can walk you through the process and show you the good and the bad, because the bad has to be told too. You can't just live in this pretty world all the time. Then show you what potentially could happen and potentially what it could look like, and to have the ability to tell you about the town and tell you about that area. And then the ability to work with someone who's in the mortgage business that can guide you from the beginning to the end, hold your hand. We were talking about it the other night, Austin. I wear usually 3 hats when I take on a loan. I take on the fact that I'm the mortgage person getting you the loan. I take on the fact that I'm someone who is in essence a financial planner and trying to tell you how to save for it. And then the third thing is I'm part psychologist, psychiatrist, whatever it is, because sometimes it gets emotional. Sometimes it gets upsetting. There are times when you buy a house and something may go wrong. Our clients that are closing next week, there was an issue with the people that are buying their current house. And a little over a year ago or a couple years ago, they had a situation that they had a problem with, and it really hurt their hopes of buying a new house. So they stopped looking. And, now I said, listen, we just have to sit down. Let's take a step back. The market right now was indicating certain things about the purchase of their home was pretty common, with the appraisal taking a little bit longer. And the next day we heard some great news, and now we're on track to close on the date that everybody wants to close. I don't have a degree in any of those things, but I am talking to people on a daily basis. So I have to be that. I have to be there. And at the end of the day, it's the best feeling in the world when you close that loan. People will cry and say how thankful they are. People will be so happy for you, for themselves, and so happy that you were able to help them through things. They've gone through 3-4 different mortgage companies, got denied here, got denied there, and we package a loan together. So the customer service is something I really think people really need to understand is a big part of the business.
For sure, and a lot of the clients that we work with, they kind of rave on your customer service, because of
I appreciate
and
that.
I know that I can call at any time, and I know that sometimes I call extremely late, and I'm like, dude, I'm sorry, but can you answer this question really quickly? And you're there, man. I greatly appreciate that.
Yeah, no doubt. No doubt.
It's interesting that you say that, and just to attest to the wealth building or the wealth planning aspect of it, we just had that transaction with the young family in which they kind of started their kind of credit repair and financial, preparation, for 6 months before they actually got the ball rolling. And, from that process, start to finish, it was cool to see them, not be ready, but eventually become ready. And
Exactly.
now, they absolutely love their new home. So
Exactly.
we're gonna start wrapping up. I'm gonna get into the core 4. These are the questions that I'm going to ask every single guest that actually comes onto the show. And I'm going to start it off with, what's your favorite aspect about real estate?
It's pretty hard. I mean, there's a lot of aspects that I really, really like about it, but I think the best aspect of it is the fact that it's never the same. The daily basis that I go through from Monday, Tuesday, Wednesday, Thursday, Friday, Saturday, and Sunday, working every day and going from each day is different. I love that. I know that most of the people that I do loans for go to work not 8:30, 9 o'clock, work throughout the day, leave 5:30, 6 o'clock, whatever it is. And the majority of them, they do a lot of monotonous things with their day. And I personally, I couldn't do that. I don't know what it is about me. I get antsy sometimes. We've been on this call and I've been sitting at my desk for almost an hour and my hands haven't stopped moving. So I don't like to be behind a desk. I like the ever changing of things. I like going to an event at 1:30 in the afternoon and spending 3-4 hours there just talking about business and talking about the way the market is going and forecasting with friends and colleagues and potential new referral agents and seeing how that stuff works. I really enjoy that. So the ever changing aspect of the business and a day never being the same is really what I do enjoy about it.
Awesome. What is your favorite? Well, I won't ask your favorite because favorite is a very hard question when you're asking it. But if you can give me your favorite business or personal development book, or even the most recent book that you've read that had a major impact on both your life and or your business.
Yeah. I think for me, and I told you this, I don't know if you remember a couple months ago about me, when I wake up in the morning, I do meditate. So as far as personal stuff, my favorite, and I don't have a problem calling this my favorite because I've read it a couple times now, it's called The Miracle Morning, The Not So Obvious Secret Guaranteed to Transform Your Life Before 8 a.m. It really just makes you focus and kind of just make your day go. And being that not every day is the same, to have a little bit of structure and to have certain things go from A to B to C is good. So when I wake up in the morning, I do meditate and I do try to focus my energy and calm myself for the day ahead. And The Miracle Morning is it is a phenomenal book. Hal Elrod, who wrote the book, he's a younger person. He's not an elder person. He probably would be classified as a millennial. It was just a great book that I just got a lot of knowledge and motivation to do good in my business and to do good in life. So I would definitely pick that book. Obviously, there's millions of books that you read, and you got people like Gary Vaynerchuk going out there and giving you all these positive things and different looks at it. But that book really does stand out to me for just the general knowledge of mixing personal life and business. So that would definitely be my pick.
No, it's a great book. I read it. They have a version for real estate agents, and it just helps you, because I'll just make that one tad bit on the book itself. But it just helps you realize that most people, when they wake up, the very first thing that they're doing essentially is getting ready for work.
Right.
So it's never about time, for themselves. It's already, you're waking up already to go spend your time essentially for someone else. Obviously it's for your benefit of, having a job. And obviously this isn't a bash for anybody that has a job. I actually wish in the beginning that I still had a job and maybe would have transitioned a little bit differently. But especially when it comes down to loans and investing and things like that, jobs are the best way to start getting invested in real estate for sure. And, but I do notice that because I was the individual. The very first thing that I did was I woke up and you start getting ready for work. You know what I mean? So it's like, what kind of energy are you setting towards the day? You know, of your life. You know what I mean? So once I took the time, like I even practiced meditation, and it was weird as hell in the beginning. And then you really, eventually realized like, oh, it's not the like like it's not that. Like it's actually just coming back to focus on right this very second instead of kind of letting your brain go haywire because I think it produces 62,000 thoughts a day. Don't quote me on that, but whatever that number is, it's astronomical, and that's a lot of activity that's going on in your mind. And it just helps you quiet your mind and be able to just focus on what's in front of you. Okay, awesome. What are some fun things that you actually like to do in your spare time when you're not busting your butt out in the field, closing deals, helping people with mortgages? What are some of the fun things that you like to do in your spare time?
Yeah, definitely. Love to play sports. Love to hang out with my friends and play sports, basketball. Throw the football around. Throw the baseball around, stuff like that. Really like to do that. As well as I just like to relax sometimes. I like to invite some people over my house, watch a movie, watch TV, maybe grill, play some lawn games, whatever they choose to be, and just relax. I really do like that. I just like taking a step away from reality. One of the things you realize when you grow up, obviously you and I went to high school together, Austin, so we've known each other for a long time, and you could see the growth between both of us and how different we've become. You don't really necessarily think when you wake up in the morning, you go to work, you make money to pay the bills, and it's a circle, and you have that circle, and it's repetitive and stuff like that. For me, when you have the ability to invite your friends over, watch TV, invite your friends over, play a sport, and you take yourself out of that reality, it's just so peaceful and calming, and I think that's the best part of my life. And then the other part that I really enjoy and really recently have started to enjoy is I do my brother and sister-in-law have 3 kids. I have 2 nieces and a nephew, and just to watch their youthfulness and to see them grow, see my nephew who's now 5, who's also my godchild, become a human, not just waking up and crying and then eating and then crying and then sleeping, which I would gather that most of us would rather be doing now than we are doing. But that aspect of him growing into a human, to him saying his first words, just putting sentences together, to now having full-fledged conversations and asking why and learning about life. For me, that part of life is the most enjoyable of everything. It's
pretty interesting that you said it, because Asia, and for those who don't know, Asia is my girlfriend. Asia, she has a goddaughter and who lives down in Baltimore, and every now and again we'll go down there to go visit them and visit the family. And to your point, it's so interesting to see just. Yeah. And that's kind of the closest thing that I've had, or at least, have been in. And it's remarkable to actually see them, like, not being able to move or not being able to have any type of designated motor skills or anything like that. And all of a sudden, like, now they're, either holding your hand walking across the street or, asking you questions about certain things. It's phenomenal. So I do understand your point on that one.
Yeah.
Okay, and then the last one, Chris, where can people find you at?
Absolutely. You can find me at my office. My number is 973-986-7074. You can find me on Facebook at Chris Brower, Brower. And then on Instagram, where I'm most, I guess I'm mostly on there. I'm there all the time. Facebook, I'm very active as well. Instagram handle is at Chris Brower Jersey Mortgage. So you can find me on there all the time. And I'm here for anything. And if anybody has any questions or concerns about maybe they're going through something with their current mortgage person, I'm not going to be here and say, nah, don't use them. Come to me. I'm just going to give you the guidance that's needed. I'm going to tell you whether or not it's commonplace, whether or not it's not commonplace, and whether or not you should make a change. if you have any questions, comments, if you just want to reach out and say, hey, what's going on? If you want to, just talk about whatever, I'm here.
Awesome. Chris, thank you for taking the time. And definitely, I'm pretty sure the audience was able to get a lot of nuggets of gold and a lot of nuggets of information that they can definitely use as individuals continue to buy real estate in 2018. This is Austin Smith. This is Chris Brower. Both signing off. Thank you, everybody.
See you later.
Awesome.